So welcome back to Everything Marketplaces, where we talk with marketplace founders and leaders as our group chat guests every Tuesday. So this is episode 44, and we're going to change it up a bit today by welcoming on Keith Bender, who is currently investing in marketplaces at Pear VC. So most of you have probably heard of Pear VC, as they are a top fund in the Valley, and it's also notable investors in some incredible marketplaces at the early stages, such as DoorDash, which recently just IPO'd. So Keith, welcome to the group chat. It's definitely great to have you join us here today as a guest. We have quite a bit to dive into with marketplaces, but before we do, if you could start off by sharing a little bit more on your background and what led you to investing in startups and marketplaces more specifically, that'd be great.
Cool. Well, first of all, Mike, thank you so much for having me here. Delighted to be a guest and really excited to plunge into the Everything Marketplaces community. I think it's an invaluable resource to all the aspiring marketplace and marketplace infrastructure founders out there. It's certainly a necessary element of entrepreneurship to have community and something that was definitely lacking around what I think is probably one of the most defining business models and opportunities for entrepreneurship over the next couple of years. So I'm really glad that this community exists and grateful to be a part of it. Happy to jump into my background. Pre-Pear, I was a consultant at BCG for a while, and largely in our consumer and energy practices. Got to work with a lot of clients, see very legacy businesses, operating companies that I think in many ways sometimes thrived off of information asymmetry, not through their own design, but just that's how their industries had come about. And a lot of times we were called in to help these clients think through strategies as early stage threats, competitors were rising through the ranks. And one of the questions that we often got was, okay, what startup is going to come eat our lunch? The second most popular question we got was, is Amazon going to come for our business? And you'd look at them and think, well, this is a regulated electric provider. Amazon's probably not coming for that business, but they were seeing Amazon devouring other industries and really curious about what type of disruption would shake out in their own industry. And a lot of times that disruption was breaking on the wave of like this information asymmetry evaporating. And a lot of times information asymmetry was evaporating because people were bringing transparency through marketplaces, connecting buyers and suppliers like never before. So those were some of the early seeds for me, even years ago before I was considering investing. Rewind even before that, I'm from Arizona. There are a lot of small businesses in Arizona. I drive around, I notice delivery trucks going left and right, taking all sorts of things from one warehouse to another. And I would often ask questions like, who are all these companies? Oftentimes they were family, friends, parents who were involved in wholesale or distribution businesses. And it always kind of felt like this invisible layer to me of the economy. And so it's just been a big point of curiosity as I've started off my investing career. I was lucky enough to have my first investing job with Bessemer Venture Partners, specifically on a team that looks a lot at marketplaces. And so really got to see some emergent business models there. When I moved earlier stage with Pear, I thought that there's not a lot of not a lot of guidance for very early stage marketplace companies. And so often I find that founders come into a marketplace business model after building something else for a while, building other software tools, addressing other pain points for either buyers or suppliers, and then they find the opportunity to facilitate marketplace type transactions. And so that it would be useful to focus there where I could. We don't necessarily focus by sector at Pear on paper. We're early stage investors, and that's our commitment. But I've definitely tried to draw myself closer to the marketplaces community as much as I can, because I think that there are a lot of questions that come up at the early stage. So that's me, how I got into investing, how I got into investing in marketplaces specifically.
Awesome. Well, thanks for sharing more with us on that. So I like the point as far as marketplaces kind of being the sort of invisible layer. So that's a great way to put it. So if we do kind of like go back a little bit, because I think it's quite interesting, what led you to join the Pear team though?
Yeah, that's a great question. There are a couple things that led me to join the Pear team. One is I kept hearing Pear's name. So while I was at Bessemer, I kept hearing Pear's name as, a top seed investor. And one thing that you do as a Series A or Series B investor is you track investments that top pre-seed and seed firms make. And Pear was frequently at the top of that list. A lot of, analysts were rushing around breathlessly trying to get a hold of the latest company that Pear had just invested in. So, that was kind of my first exposure from the investing side. That was all going on also in the context of I was in business school at the time and had a number of friends who were founders. Many of these friends were founders at the very earliest stage, and they had taken an investment from Pear. They had met somebody on the team and were just blown away at the commitment that the firm exhibits to its earliest stage founders and the resources that are on offer at Pear to people who are just experimenting with ideas at the very early stage. So I was getting these twin signals. Okay, founders love Pear, later stage investors love Pear. I should really spend a little bit more time with the team. And that's exactly what I did over the course of a couple of months in the fall of 2019 as Pear was raising its latest fund, its third fund. That led ultimately to a job opportunity after the fund closed, and I was hired on about this time last year. I've been just thrilled to be here. One of the great joys of working with the Pear team is just the breadth of experience in the room across industries, and everybody's focused on helping founders at the early stage, but we really have this broad coverage of every business model you can think of. Many of our partners are former founders themselves or high level early stage operators. I say in the room, even though I've only spent collective 5 hours in any type of room with folks at Pear, and pretty much all of that was in early 2020 before COVID was on anybody's minds. But those kind of were the pathways to Pear for me, and they've definitely been borne out in my time here, and only kind of deepened my conviction that it matters to have a dedicated early stage fund, somebody who's willing to go to bat for your founders no matter the time of day or night, somebody who's willing to sort through all the messy details of getting a company off the ground. And for me, that's I think Pear is one of the best in the business.
Thanks for sharing with us. So I did have a question when you mentioned the earliest stages. What does that mean? Because I think a lot of us here in the group that are marketplace founders, typically are kind of used to hearing that. And yeah, if you could share a little bit more on that.
Hearing it in the context of you're very early, we'd like to see a little bit of traction, and then going radio silent, and you're like, well, what does it mean to have traction? So we at Pear think of we think of the world in terms of 0 to 1, and this, by the way, was something that the team told me early on, and I'm kind of like allergic to jargon, and so I hear this phrase, Pear sees the world in terms of 0 to 1, and we want to be the best partner for founders going from 0 to 1. And I just kind of wasn't prepared to accept that at face value. So I really wanted to understand what they meant by it. And a lot of that consisted of me asking friends who were founders and working with Pear, okay, like, tell me what your experience with them has been. Does this make sense to you? Is this truly how they operate? And it indeed was. But it required me to dive into what they mean by 0 to 1 as well. 0, I think the way we think about it here is, you had the idea, you didn't have the idea in your sleep last night, but it's much closer to that than to anything else. It's something that's probably been nagging at your conscience and in the back of your brain for a long time. It's not a fully formed idea. Every time you think of it, maybe you brush up against this idea. You've started putting some ideas on paper. You kind of surface additional doubts, questions, things you need to dig into. And we're looking for founders who are really tenacious, and every time they surface those doubts, questions, things they need to dig into, they press ahead, they try to answer those, right? And they keep ideating on it, as it were, in their mind. So 0 is in our world much closer to the idea stage, but by no means is that an indicator of Pear's lack of interest in meeting with somebody. In fact, like, I think it's probably one of the most important stages of a company's journey is just how you think about it, how you conceive it at day one. and like what vision you create for yourself to motivate yourself to go out and build this company. And so to the extent that we as investors can be helpful in shaping that vision, because oftentimes the vision that an investor has, if it's not aligned with the vision that a founder has, you're going to run into trouble later on. It's an advantage to us to see the journey to that vision at zero. One is, it's been written about a lot, but one is kind of like, you've built something that has product market fit. Okay, more jargon. What does that mean? The way I think about it, and I think I've gleaned this from the Pear team, is you've built something that if you were to take it from the people you're selling it to, they would no longer be able to function in quite the same way. They've come to rely on what you've built essentially to run their business, that they're grateful to have you, but they're also really dependent. And so we think the journey from 0 to 1 is one that moves toward like a state of indispensability. And that like embedded indispensability is the aim of everything that we do. It's the cornerstone for our support on product building, on growth strategy. When we think about who you want to bring onto your team, to fill out maybe your sales efforts or your first engineering hire, the measure in our mind is always going to be, how is this making what you've built or what you're building more essential, more indispensable to your early customers? And when you have that, you found what the jargonists among us will say is early stage or early product market fit, and that's fertile ground to go out and raise a Series A, and that's a big part of what we do as well, as supporting our teams to go do that.
That's great. I do want to kind of come back to that, maybe
Yeah.
Walking through with an example, as a marketplace founder, kind of how they might best approach
Yeah.
that, and how you guys would ideally work together. Just kind of with your insights on the other side. I did
Yeah.
have a question though, and that's just how do you and then kind of Pear think about marketplaces and kind of evaluate marketplace opportunities?
Yeah. I think so. At the pre-seed and seed world, when we think about marketplaces, we don't first apply the marketplace filter. We first apply the pre-seed seed filter that we have for any opportunity. And those two things for us are, okay, who's this founder that's coming to us? Do they have like this undying zeal for what they're working on? Are they in love with this problem more than the solution that they've conceived in their mind? Do they have a kind of this burning desire to solve this problem for people? Okay, now that's great. Like, do they have skills and capabilities that back all of this up? Those are kind of table stakes. And then let's click into this problem itself that they're telling us about. Have we heard of it before? Do we think it's a big problem? If so, how big? Right. Those are the kind of the filters that matter at the super early stage. Team and market size, and you'll hear the common refrain. But like, it can be hard if you don't have concrete examples of why somebody would be looking for team and market size. And for us, team is, yes, there's an element of founder market fit. There's also this element of, does the founder have an unfair advantage in understanding the problem? Does the founder have an unfair advantage in solving the problem? Are they willing to work to build that unfair advantage, or to bring it in-house if they can? And then on the market side, it's like, who cares about this problem? How painful is it for people? And like, do we believe that? Because that can be an assumption riddled exercise. And so we're looking for really concrete evidence that this exists. It's not some like, ephemeral like definition of a market size. We're kind of looking for, yes, this is obvious, but there are also obvious reasons why this problem exists. And so like, when you have those points of evidence, like, it's often the biggest markets that have the most obvious problems, like that kind of saddle them, but it then presents the most exciting opportunity to build something. And so that's when you go back to the team. Is this person going to be able to build something? Have they articulated a novel vision? So they work hand in hand. Often I think people like feel that team and market, which are these common early stage filters, function independently. So we start there. And then when it comes to a marketplace company, the exciting thing about building a marketplace is just by definition, these are often some of the largest opportunities one can possibly conceive of. You're saying, I'm going to jump squarely into the middle of all of this spend. I'm going to like not just double my addressable market by courting both suppliers and buyers, but I'm going to create adjacent opportunities for myself upstream and downstream from both of those points. And you don't have to do upstream and downstream for both buyers and sellers just, to make it a compelling opportunity, right? Everybody has their own recipe for how they're going to do it. But I think like the specific angle that somebody comes in as a marketplace founder and shares with us is really important, because it can't just be, hey, we're going to get a bunch of buyers and sellers on this platform and charge X% just for the privilege of being there, right? That's a non-starter. So we are kind of looking for what else have you, what other insight have you brought to the table that's going to make this, like I said earlier, indispensable for either of those parties. What operational tools are you going to give them so that they're running their business without hesitation, and they're glad to participate in whatever, or glad to allow you to participate in whatever value you're creating. So we start thinking about those things, and then like that's all at the conceptual level. Then we get into the numbers. Right. So we've graduated from market size, and now we want to start thinking about, okay, what have you built to date? Like, have you built a core product that I talked about earlier that exists outside of the market itself? But like, do you have a functioning marketplace? Do you have any type of liquidity? Of the number of buyers out there in the world, how many are on your platform today? What are they buying? And then same thing for sellers. And I don't have hard and fast metrics there because it does depend by industry, but like the rule of thumb that I like to think about is actually it's more important that you haven't exhausted everybody on either side. Like you haven't talked to every potential supplier out there and had the door shut in your face. It's more like you've started smartly and attentively, and you've delighted somebody quickly. Like the best advice that I have for building a marketplace, or probably anything for that matter, but really a marketplace, is delight somebody, anybody, really quickly. Then you have an advocate. Then you have kind of a paradigm to replicate. You know how to serve somebody, and you kind of have a path forward from that point. The other piece I would say, just like really concretely for how we evaluate early stage marketplaces, is like what is the opportunity to monetize here, and what's the timeline to unlock that opportunity? So often I find promising marketplaces that are so focused on aggregating and building beautiful tools that the question of when we turn on a monetization piece is an easy one to punt down the road. But I don't think that later stage investors see it that way as much. Like it's not a consumer company where it's about getting as many people as you can using the platform. Like you still can encounter resistance to monetization down the road. You may not, like, you may be surprised at, for instance, if you turn on payments and realize that like your payment facilitator is going to take most of the value that you're ostensibly creating there. So we're I guess looking for early stage marketplaces that aren't afraid to experiment early with monetization, and kind of have some evidence that people are glad to pay for the services that are being provided. So those are some ways that we think about it. Happy to talk more specifically on metrics and other things.
Awesome. That's super helpful. I'm sure we'll have a few with questions on metrics specifically. So cool. So I did have a question for you. And, this could be on a personal note, and then also too with Pear is, are there any specific marketplace types that you're interested in, personally, and then maybe Pear, as far as kind of seeing opportunities? I know, like me personally, like I love peer-to-peer marketplaces, for instance.
Yeah. I like peer-to-peer marketplaces too. I'm always looking for somebody to articulate, like, what are the giant underserved or like not yet served peer-to-peer opportunities? Like, what are the things that we do with our friends on a daily basis that nobody has built a marketplace for? We have a company that that we invested in a couple of months ago at I guess seed and pre-seed also called Wager. This is a peer-to-peer sports betting company, and while it's not a traditional marketplace, it is in fact making a market. And the way that I think about it is they were intelligent enough to realize that this is something, this is a true market that exists in a peer-to-peer fashion today, and nobody has considered like building a fully functioning platform, fully regulatory compliant platform for it in the way that we envision there's an opportunity to do so here. And like I stand by that. I stand by this vision of great marketplaces aren't necessarily about always creating new types of spend. They're about just connecting people with more information, transparency, fairness, trust than today's either offline or siloed transaction tools enable. So peer-to-peer, exciting, obviously one of the oldest type of marketplaces you could imagine, throughout the course of human history. I personally am interested in kind of big silos of spend around construction, renovation, home services, just anything where, like pick up, I don't know if anybody even gets yellow pages delivered to them anymore, but pick up the yellow pages and think about all the small businesses in there, and then try to group them, and then think about how they reach their customers today. More specifically, think about how customers reach them, and you find just untold opportunities to connect people on a marketplace. Um, I think about professional services as this one of these final frontiers as for a marketplace. It's hard because it's a non-standardized industry, and one of the benefits of a marketplace is just bringing some measure of standardization to supply to products. I yearn for that as somebody who regularly is evaluating the merits of various professional service providers. I think it's a shame that there are limited standards and comparability, and so one way to create a lot of value is to standardize things, and so services industries in general just really suffer from a lack of that sort of common language. So that's where my mind goes. And then in terms of raw products, I think just me and Pear, like we skew more towards the B2B world. When you're moving atoms, just find that there's more spend and more opportunity on the B2B marketplaces side, though we're always excited to see somebody come through with a B2C offering.
Awesome. So just I did have a question that's on the Keith's kind of request for marketplaces, what would that maybe be that you like to see?
Yeah, kind of what I was describing earlier. Um, Professional services, home services and construction, um, anything that has to do with hiring somebody to perform a service for me as a homeowner, as a small business in and of myself. So whether I'm a sole proprietor of a business, or I'm about to like uncork some ungodly amount of spend to perform a service on my on my home, on my car, or on some other asset, on my finances. I today am probably relying a lot more on um, on recommendations from peers than I am from any site, any sort of trusted, vetted, um, kind of kind of like online repository, and so I think that's where there's a wish list for me. In terms of consumer products, I don't have anything at the top of the wish list right now. I get excited about a lot of B2B wholesale opportunities. I think a lot about cross-border commerce, and just this idea that there's you can look into the data and see a global diversification of supply chains happening, and so it's more about like how can we connect manufacturers in other countries to buyers in the US who are seeking to diversify their supply chain a little bit. I think there are a lot of companies that are dancing in that ballroom already, and I'm excited to get to know many of them.
Awesome. Yeah, we have quite a few interesting ones in the group, so I'll have to connect you with a few of them. So we're going to jump into questions here in a little bit, but before we do, this is quite a loaded question, but I wanted to just kind of hear a little bit more from your side for an early stage founder that is building a marketplace, how you would kind of advise them to approach Pear,
Yeah.
at what stage, and yeah, that'd be great if you could share more on that.
Yeah. Well, we are in the business of meeting founders at the earliest possible stage. It doesn't mean we're in the business of always writing a check at the earliest possible stage, but like the goal for me as an investor is to find enough evidence to be able to write that check at some point. And the earlier that I can meet somebody or at least understand the vision that they're building towards, the more evidence that I'm going to have to do that. And so like I don't know, I would hate to insinuate that like you shouldn't approach Pear or any other early stage investor at like day zero. That's totally the wrong approach. Like, I think that there's merit in saying, I don't think that I'm raising right now. I don't know if this is a fit yet, but here's how I'm thinking about these opportunities. You may have seen a couple other like them. Any advice for me? And if you frame that conversation and you target it towards somebody who has a demonstrated interest in, the sector you're building in, I think you're going to be really surprised at the warmth of the reception that you get. And so I can only really speak for Pear right now. But please come, say hello, let us know what you're working on. Doesn't matter when it becomes the right time to evaluate. I think like it's pretty clear what we're going to ask for and what we're going to look for. And so no hard feelings if you're not at that point yet, but that doesn't necessarily disqualify anybody from being able to get to know us or have a conversation. In terms of like the right time to think about raising, yeah, there are business milestones that matter. Um, like I think that it's important to have your team in place. That's probably the biggest thing. When you start thinking about raising a pre-seed, like you need measurable traction on a few dimensions on product, right? Like where are you on having built this product? Like, is it a working MVP? Is it mock-ups? Like let's evaluate this product to see if like the funding that you're about to take in is going to get it to a point where you can get it into customers' hands or not. I think that's how we think about product at the pre-seed. And if it's an MVP and you're conducting some of the business yourself, you're kind of fulfilling orders on your own, you're serving as a clearinghouse, that's actually awesome. Like it's great to see. It's great to see these like early stages of a business. And so we're gonna just dive into representative economics of like this small experiment or project that you're running and understand how scalable that is. What will change as you're able to automate more things with the aforementioned product development. So it does kind of work hand in hand. We we definitely are biased towards traction on both of those fronts at the pre-seed and then especially at the seed stage. When you get into the seed stage, a lot of investors now seem to be favoring, okay, like let's tell me bottom line, what's your net revenue? How am I getting to a like a ARR or MRR figure that helps me compare to other opportunities? I still think that GMV matters quite a bit. I think that the raw absolute number of GMV is important, but I also think that the quality is particularly important as well. Quality of and diversity of GMV. So like if one supplier went under, like do you still have a business? If one of your customers decided to walk, do you still have a business? I think that's important for you to have some diversification there. And then quality in terms of like, are these people prepared to pay? Are they paying today? Do they have this desire to expand their spend with you over time? Are there others who fit this profile who they're willing, who for whom like this GMV you have today would be willing to serve as a reference or kind of catalyst to help you get out into that world. So that's how we would think about it. I think that it's appropriate to start seeing seeing like a take rate in the, let's say 2 to 5% range on some transactions. By the time that you raise a seed, 2 to 5% take rate, and like in aggregate, it doesn't have to be like you tack that onto the transaction, but like your effective take rate, the effective revenue should be about 2 to 5% of GMV around that time if it's a B2B marketplace, in my experience.
Awesome. That's super helpful. So cool. So we're going to jump right in here to a few questions from the group, if that sounds good to you.
Yeah, that sounds great.
Hey, Sam, did you want to jump on?
Yeah, thanks, Mike. Hi, Keith. How are you?
Hi, Sam. Doing well. How are you?
Yeah, very good, thank you. Keith, what's kind of Pear's take on founder salaries, and how do you view that, and how do you take that into your equation?
We think that founders should absolutely pay themselves. It's important that you have that you have some, like living money. We think that founders should also, of course, pay themselves generously in equity at various stages. There are different numbers that are appropriate. Often founders aren't the ones making the most money by any stretch of the imagination at the company. This happens. This probably is the case for some time, and it's probably a mark of the company's journey that more people continue to make more money than you, like in terms of raw salary for a couple of years. Like your company's probably on the path to success if that's happening. I don't have I'm not going to tell you a specific number, but I think that there are good resources that allow you to benchmark that by market, by stage. I do think that founders should absolutely pay themselves and reward themselves for their efforts. Like don't put yourself in a position where your work and your commitment to the company is going to be compromised by your personal finances.
Cool, great answer. Thank you. Appreciate that.
That's a good question. Got to pay those bills. So.
Yeah.
Cool. Hey, Rich, do you want to come on?
Yeah, sure. Selfishly, a question I have that I'm thinking about for Bamboo.
Of course.
You talked about creating this kind of state of indispensability for your customers where they're kind of dependent on you.
Yeah.
And I guess that comes also with product development and how much rake you can command. So, DoorDash and other delivery services now command like a massive rake, and I'm always amazed at how much they're taking. How do you view that in terms of at the real beginning in the pre-seed stage? And how you can evolve that up over time?
Yeah. Well, with delivery services, I would say that the massive rake is as much about covering infrastructure costs as it is about like just having a big take rate. So like to the extent that you're doing fulfillment and delivery, I think you see the effective take rate go up considerably. A lot of delivery companies aren't strictly profitable yet, so it's a question of, is that where they're going to end up making their money over time? Is it going to be on delivery fees, or is it actually going to be on some type of value added service that extends beyond that? Like, are we going to get into some type of financing opportunity, and that's actually where the profit comes from? This is just a means of recovering the cogs of a delivery infrastructure. As far as scaling it up over time, with Bamboo, you're probably at a point where people don't have a good benchmark for what to pay you yet, would be my guess, because they're probably doing a lot of the work themselves and don't really know how to value their own time. So one exercise that I've seen founders do is just work with a couple of the earliest customers and say, okay, like, how many hours a week would you spend performing this task already? How much do you make per year? How much does that translate per hour? Like, what do you expect the value to yourself is to no longer have to do that? And then just run the numbers and see where that comes out. Often, like it might be higher than you would imagine, like a higher percentage point than you would imagine. And if it's something that those early stage customers are willing to pay for, then I think that's totally fine. Like, as you grow, you're going to get to a point where you're providing more value on your platform beyond just the delivery. And so, your opportunity might be to lower the delivery fee as a percentage of your business and charge elsewhere, and like do so without, like, I guess, hurting your company, and like you would at that point be making life much better for your customers. But I think that the is not to like ratchet up delivery fees in an unwarranted, or ratchet up a take rate in an unwarranted way. It's to figure out like what type of composite suite of services can we provide? How can we charge it a little bit for each thing, so that it doesn't feel like this just gouge every time that an order comes through. And I think that's the fear of a delivery fee being your primary driver, or just kind of this giant rake being part of like the way that you make your money. Like it just becomes such an obvious like part of the your customers cost picture, and I think they become more liable to resent you for it.
Definitely. Yeah, some great tips. And like you mentioned about secondary ways you can make money, we're seeing like on Instacart, they do advertising, for example, as a way that the big suppliers can pay them a lot of money.
Exactly.
Thank you.
Of course.
Cool. That's a good question. I think you guys chat offline too. So
yeah.
Cool. Awesome. Hey, Fitz, did you want to jump on?
Yeah. Hi, Keith. Thanks for doing this presentation. So I'm just curious. I'm working on an idea in the professional services realm, and was wondering how you think about marketplaces versus subscription-based platforms.
Yeah. Marketplaces work really well for I guess discovery driven activities. So for a lot of professional services, I'm in the business of trying to figure out like who is the best suited to meet my needs, and the transaction that I'm probably moving towards is not like highly repeatable at the outset. Like over time it might be, if I create a relationship that I'm excited about. But I think that marketplaces work well for anytime I'm trying to like discover a new product or service. Subscription businesses work well if you have like predictable supply demand relationships. Like you can as a marketplace, you can facilitate subscriptions, of course. And like if you have very limited supply and it's very highly curated, right, and like that supply will satisfy the majority of your customers, then there's an opportunity for you to just turn your offering into a subscription offering itself, right, to partner with your own supply and to create a subscription offering. But I almost think that my bias is towards building a platform that allows the business to find, the demand side to find like whatever they need in whatever business model is most appropriate to their needs. So without more context, I don't want to steer you too strongly one way or another, but that's how I would think about it, just based on the question you asked.
Yep, that's helpful. Thanks.
Cool.
Yeah.
Hey, Dan, do you want to jump on?
Sure. Hey, thanks, Keith.
Hi, Dan.
So first I'll tell you who I am. My name is Dan. I started a marketplace with my wife. It's in the publishing industry. It's a live appearance marketplace for professional authors to meet with, basically Zooms with their fans.
Awesome.
And my question is, what are some examples of businesses that you've invested in that have pivoted based on what they've learned in early operating? And how did you interact with the founders over the course of that, period?
Yeah. I think, I don't know, I don't have the hard and fast number for what percentages of businesses end up pivoting, but just a quick thumb through in my mind, probably like 5 to 10% of businesses that we've invested in at pre-seed pivot in some way. either pivot by, let's say they start out selling to, selling loans, right? They start out as loan originators, and it turns out that it's really hard to go out and qualify a bunch of customers. It's hard to get proprietary data, but they've built really cool loan servicing infrastructure. And so then they start selling to banks. And so that's like a micro pivot in the customer, the target customer. I see that more often than I see like full on, we're just going to tear down this business and keep the team intact. Like, we love working together. Let's just, throw darts at a whiteboard. Yeah, sometimes you want to throw darts at a whiteboard. Throw darts at a dartboard, and pick something that we want to build together. Like, that happens, but it's usually in like week 5 of the business's existence. And if it happens any later than that, it's usually because you've taken money from investors and you don't want to just give it back immediately. And so like what you're trying to do is come up with a plan to go and show to your investors that you're going to be thoughtful with it. But I don't know if you're considering pivoting, and if you have more context there, but like we see this all the time. The examples that I like are more about like a proper pivot where you're just changing a couple of dimensions of the business and then you emerge down the road. And most of what you recognize as the business that is successful years later is actually additive over that 5-year stretch, and doesn't necessarily owe to like major design decisions that you made at the time of the pivot. Like regardless of whether you make a pivot or not, you do most of the work over a 5-year period. And so it's just kind of shifting the direction a little bit is it feels consequential, but like all the hard work still has to happen. And so I would hesitate to say it's the pivot that is the defining factor in any one company's success. But like I just would, my advice to any of our companies that are considering a pivot is to treat it almost exactly as they thought about, like, put as much thought into that as they put into forming the business at the outset. Like, think of it as a go no go decision, and figure out like if you want to commit all of your personal time and resources into this. So it's kind of a, I don't know, not a loaded question, but it's a hard one, because it's also deeply personal for a lot of people, when it's truly like this type of, are we doing this business or not? Or are we doing a different business? And then if it's just a pivot because you're changing some of the way that your product is positioned, who you're selling to, et cetera, those become more rational like decisions that you can make with data, with evidence.
Very well said. Thank you. And I'm happy to provide you with context as well. Perhaps.
Yeah. I don't know, Mike, tell me, are we allowed to? Yeah, it seems like we have time.
Yeah, go for it. We'll have like one more question after this.
I built this MVP, and it's two-sided, but readers and authors, and we have many years of experience doing sort of an offline version before the pandemic.
Yeah.
And it all kind of happened during the pandemic when Zoom became a thing. And then once we started, we created a third user type, which is basically an organizer, but using the public library system. And we got a library system where we live that has 38 member libraries to basically be our test pilot. And we're discovering that, like you worded it earlier, what would this person's feeling be if your product is no longer available to them? It's got to be something that would be a real loss for them. That is the case for the libraries. They are perhaps our customer. So I think it might be a B2B2C business. And then that has kind of sent me in the direction of learning about these e-library apps like Canopy or Hoopla, Overdrive, if you've ever heard of those.
Yeah, definitely.
And so I'm starting to think that this might be that.
Got it. Okay. So this is a who I'm selling to and like product I'm building switch. The the core market you're playing in hasn't changed considerably. Yeah, I think that the best pivots are more just refinements of your vision. You get more clarity on your building for what you're building. It sounds like, if anything, it's a doubling down of the initial vision that you had. And if it's all in service of better meeting the needs of these end consumers, these readers, these fans, these authors, then like, you don't have to think of it as a world-changing pivot, as just you know more about how to best serve them.
Yeah, and I have to do some research again to reevaluate, because all of a sudden it's free to the end user.
Yeah.
The libraries that would pay. So I have to kind of figure out how deep is that trap.
Yeah. Yeah. Well, I guess, libraries are in the habit of paying for digital material, and maybe they're not yet really in the habit of paying for digital live or access to, live or recorded content. That's probably a paradigm shift that that you would do well if you believed in it, to try to usher in yourself. And like, you have to create that category a little bit for libraries in their budgets. So it requires a bit of work, but the most sure way of carving out room for it is by illustrating demand from the end consumer. It sounds like you've kind of, you're working to close that loop.
Thank you.
Yeah.
That was a good question, Dan. And thanks for sharing with us, Keith.
Mm-hmm.
Cool. So we got one more question for office hours with Keith over here. So we have Miriam. Miriam, did you want to come on?
Yeah, hi Keith. I'm just wondering, what are some of your favorite resources for learning about business models and business strategy, and like what works and doesn't work?
Yeah, that's a good question. I don't know. I'm like kind of wary of like the textbook academic approach to trying to look at what business models work and don't work. I at least the way that my mind works, I find that I'll then end up forcing like archetypes and probably like hamper my creativity. So that's it's not an evasive answer. It's just to tell you that, like, when I try to find out what works and doesn't work, I usually try to start with, what am I trying to accomplish? Like, and then work backwards from there, and just think through, okay, like if I'm trying to bring these, this type of buyer and this type of seller together, like start with the specifics, because my mind works in a way that's easier to grasp, like these specific personas. And then I just try to research, like, those personas. I try to research the transactions that are happening today between those people. I try to like get as much knowledge as I possibly can about like as I alluded to earlier, like these like true obvious pain points that nobody's solved yet. And so I kind of work backwards, and then hopefully I back into a business model, and I can massage around it based on what I've seen as a best practice. But I've always been wary of, this business model is exciting. Let me try to force it onto a new industry. And I want to really caution that my, like, I guess, fascination with marketplaces is partly for the business model in a vacuum, but like not really. It's actually because there are all these transactions that are happening in all these industries today that just happen with a lack of, with like great inefficiency and high cost to many parties, and low trust and low information quality and low supplier selection and excuse me, buyer selection. And like, I see all of that, and I find the comparative for meeting those needs is often a marketplace. It's not always a marketplace, but it often is. And so that's where like my interest comes from. I hope that's helpful to give you a sense of thinking. Now, if you like, in terms of just reading about what's going on in this world, I enjoy reading like financial markets kind of commentary way more, because like the goal of us as, as students of the marketplace world is to kind of quote, like literally build a market. And so the biggest market of them all is, is kind of securities. And so anything that's happening in the securities market, I just get interested in, and I think about it as like a path to market efficiency that any marketplace itself might want to consider traveling down. I hope that makes sense, Miriam. I'm sorry I don't have books to recommend to you though.
Hey, Miriam, did you want to share a little bit more about what about Packlane, and just for some context for Keith? The stage.
Oh, sure. No, I thought the answer was good. Yeah, my company is like an online packaging platform. So we kind of have like a managed marketplace for custom packaging.
Neat.
Yeah.
That, yeah, picks and shovels for a lot of the companies out there today, right?
Yeah, exactly.
Awesome. Well, cool. Well, this is a great chat, Keith. So I appreciate taking the time to join us. Before we wrap it up, I did have a question that's, what's maybe one marketplace that you've seen recently, or even maybe used, that you're super excited about?
Ooh, one marketplace I've seen recently. I I would say, so I got really excited about a company, a portfolio. I'm going to sing the praises of a portfolio company of Pear here. One of our portfolio companies is called Exporta. You won't find much about them online, but they are connecting suppliers in Latin America with buyers in the US. And these guys, Rob and Pierre, are just like boots on the ground advocates for every small manufacturer in Colombia and Ecuador and Peru that you could imagine. They're like universally beloved by all of these factories that they go into for helping broker connections to US buyers. And they are just taking this world by storm in kind of a legacy system of just like really shady brokers and weird international agreements. They've just carved out a kind of this corner of adoration for themselves from the people that they've worked with so far. And so I was recently getting an update from their business, and that's one that I'm personally quite excited about, given a lot of trends going on in the macro economy as well. So really excited about Exporta. I use DoorDash almost every day personally, as as Pear, as we're investors, but also because I find that 11:45 a.m. rolls around and there's nothing for lunch in my fridge and I don't have time to go anywhere. So that's probably my most used marketplace for a couple of reasons. But those are the best answers I have to that question right now, Mike.
Awesome. It's almost that time to use DoorDash then, right?
It is, yeah, about half an hour, 45 minutes or so.
Well, cool. Well, that's a great way to wrap up the chat with a quick plug for DoorDash. Just before quick plug for yourself, where can we keep up with you?
Feel free to follow me on Twitter, which is a weird thing to say. I'm not like a big tweeter, but I'm on Twitter, Keith Bender. I think it's actually Keith__Bender, which is like terrible optimization for communicating my Twitter handle to people, but you can find me pretty easily there. Feel free to shoot me a note anytime, Keith@Pear.VC. I'm also in the Everything Marketplaces community and enjoy reading that. So feel free to send me messages there. Mike, thanks so much for making that a vibrant place of communication. Yeah, and guys, thanks so much for having me. It's fun to get to chat with you all. I would just say, as a final word of encouragement, is remember that often for y'all, the competition is really just the status quo. It's not each other. And to remember your advantages, your distinct advantages over the status quo, which so often are around community and trust, promoting, information, enabling discovery, selection, transparency, and these are all like really noble things. And the humble marketplace is probably one of the best tools for bringing them into broader service across industries. So really excited about what this community is enabling for you as founders, and thankful for the time to get to spend with you. Thank you, Mike.
Awesome. Well, thank you so much again, Keith. That was a great way to wrap it up. So, and thanks everyone for joining in today. So
thanks all.
All right. See you, everyone.
See you guys.